Okay, it's Wednesday evening, October 17th. So we're going to start off with the euro dollar. This is the 30-minute time frame. So one of the last trades I had here on the trade copier was a small trade. It was a short opportunity here on the euro dollar, and it didn't drop as far as I would have expected based on the type of strategy that I was trying to execute at the time. So just to take it a little more carefully, that's why it was such a small trade. I didn't think it was going to drop too far, but it should have. But again, going back to what I said yesterday, this type of market environment, it's going to take a little while before things start to move. Where I think, and we've seen this, we see this in cycles. You get to the point where people will take the move, the traders will execute, and then it sort of stalls. Things get really slow or flat after perhaps some kind of a move that sometimes maybe with the news, things like that. I'm not saying that this one right here where I'm moving my cursor is one of those particular scenarios, but if you were to look at it from a technical point of view on what you see here on the charts, it's similar to that, where you get like a 30-minute move, maybe a 1 hour move, and then after that things go sideways flat. You normally would look at the chart when that event or that candle, that setup happens, and you think it's going to go a little bit further, but it doesn't. It sort of goes sideways and stalls, and then it takes a little while. Sometimes it'll take another trading session or two to bring back that momentum, or the people that were trading and thinking along those same lines and trying to execute the trade in the same direction. So I'll keep an eye on this one. Obviously, if we go to a larger time frame, we can see that that it's got room to go a lot further. But one of the other things, though, that I was asked just a little while ago here was the possibility of trading in HL30. So with the HL30s, and we're looking at a 30-minute chart, usually when I show you these blue screen or blue chart backgrounds, that would indicate the HL30 setup. There's obviously a couple other indicators in here that I use for different strategies, but the one primary indicator for the HL30 is the CCI. And then, of course, I'm going to be watching the pivot points and things like that, but there are ways to determine whether or not an HL30 like this would actually fail. And it's important to know the conditions that could cause a HL30 to fail. The HL30 isn't as accurate, I guess I could say, over time. If you were to execute a certain number of, let's say, 50 HL30s versus 50 continuation breakout trades, there's a higher probability and a higher percentage of losing trades with the HL30 if you were to just execute every HL30 setup you saw without looking at, and taking into consideration like the 1 hour time frame and some of the other different strategies that I have that will help me determine if an HL30 could potentially fail. At that point, then of course, you're going to improve the odds on the HL30s, but you have to be willing to take the time to understand those. Sometimes you can get away with it. Sometimes you can just trade every HL30 and not look at the larger time frames, not go back any further than maybe a day or two, and you can look at the charts just like this and trade it, and you'll be fine. But then again, you have to be able to step back sometimes, and it's important to do it on every HL30. It's just that I want to prepare you and warn you that sometimes these HL30s don't work. You've got to stop a moment. You've got to take a look at the 1 hour time frame. You've got to see what's happening on the larger time frames as well, and then use those three strategies that I talk about to know how to avoid getting into those HL30s that could potentially fail. Why I'm focusing on that and why I keep repeating it is that in a situation like this, there are times when I see good HL30s, but I leave them alone because there is the chance that it could be a failed trade. One of the things I want to go to here is start off with the larger time frames. So if we go to the daily chart, for example, we can see that this pattern right here, this is the daily time frame for the euro dollar, and we've got this evening star sort of setup. Now it's inside of this odd range of consolidation here with that low. That is from, let me get you the date there. That is October 9th. And then we've got that high right there on that red candle. That's the 12th. So that low, this high, I'll go ahead and put an X there so you can see what I'm talking about just in case. So that spike high right there, and then the low, this is a temporary short-term range of consolidation for me, the way I look at it. That right there, and then that low down here. So there's a couple of things that I want to be paying attention to. Even though I see this candle pattern with yesterday's close here, this evening star sort of thing happening here at resistance, bearish engulfing candle, even though I see that, it's still inside of consolidation. And when I see these candles or candle patterns like this inside of consolidation, it makes it a little harder for me to have a lot of confidence in a trade like this. So I would expect that price could come down lower and probably take out that low or test that low. But at the same time, this is a confusing scenario for me. So if I see this strong bearish candle, the last thing that I want to do, I'm going to go over here. This is set at the 1 hour. So then I'm going to go over here to the 30-minute time frame looking for an HL30. Now, if I was looking for an HL30, I would be thinking that I'm going to be trading this bounce off of yesterday's low. Yesterday's low is sitting right down here. This is a different page, so I apologize for having to set up these this chart for you right now. But so here we've got yesterday's low right here. I'll open up the charts a click or two. So we've got yesterday's low sitting right here. There's a rollover period, and now we're sitting. Now this bounce could work, but remember with the HL30, we're looking at a 20 pip target, 20 pip stop. So if things move up just a little bit, sometimes in a situation like this where we get a strong bearish candle, but I'm trying to trade a bounce, sometimes they work, sometimes they don't. Well, again, that approach, that attitude, that sometimes yes, sometimes no sort of concept, that's what I try to avoid. If I'm thinking that, then I'm just going to stay away from it altogether, and I'll just wait for a better opportunity. Some people don't like to do that. Some people will look at it later, or they'll come back later and they'll think, okay, well, that was just a missed opportunity. Possibly, but it was also an opportunity that it could have failed, and if you would have taken it, it might have been a bad trade. Why trade against that? So again, if I'm stuck in a situation like this where I see a strong daily bearish candle, but I'm considering trading an HL30, well, you're raising the probability of it being a failed trade, meaning that sometimes these setups like these HL30s will look good. They'll move up 10, 12, 13, 14 pips, but they won't hit the 20 pip target, and then they roll back over, and then they retest the low. Now, if we go back over here again to the daily time frame, we're stuck in this range of consolidation. I don't know how far it's going to retrace, and I could see that it could make another move down here to the the support level here at about the 1.1430 area. I don't know that it's going to hit that number on the next candle. This is the daily time frame. I don't know that it's going to do that. The next daily candle could move up 50% of the length of yesterday's bearish candle. So what I'm getting at is it's a confusing time right here for me. It is consolidation, and unless I'm trading off of significant support or resistance or trading a breakout that I can clearly see happened maybe with a news event, with volume, the indicators are lining up, the continuation breakout trade is a safer, better, more accurate trade for me. 90-95% of the time when I take that trade, it's going to hit its targets, unless the market's moving in an awkward way and I'm going to take smaller pieces of that trade, not expect it to hit the final target. But normally, normal conditions, the continuation breakout trade's a better trade. If I'm trading or considering trading right now where price is in the middle of this overall consolidation range, that's where things get a little bit different. That's where things get a little bit choppy. You can't always find a precise target or what looks like it could be a target, because you think to yourself, okay, well, maybe, again, going back over here, this is maybe 50% of the length of that candle here. That would bring it up to about maybe 1.1540 area. Well, there's plenty of room for a HL30 then. But again, we don't know that. The next candle could continue to the downside. What I'm getting at, if you hear the conflict there, it's hard to say whether it's going to actually work or not. You're just going to have to try and test it out. And that approach is what I choose to avoid. I did that for many, many years. I would say to myself, okay, well, you never know. I mean, there's also the attitude where people will think you can't make any money. Where's the reward without the risk? That is true. But at the same time, I'm also looking for lots of opportunities to stay in this business long term, to keep on producing profits, especially in a wild, choppy market like this. It's also susceptible to a lot of comments and rumors. The market is usually, but more susceptible to that at certain times like we are now. And then sometimes it'll even escalate and get even deeper. It'll get more sensitive where the market reacts to it with that knee-jerk reaction type of thing to news and comments. But anyway, looking at things the way they are, I'm also going to be looking for opportunities to stay away from the higher risk trades and keep my money. I would rather, it's like they say, keep the powder dry, wait for a better opportunity. That's the way I look at this situation right here with this HL30. The HL30, it could work, but taking a look at what I just described there on the larger time frames, I think I'd rather stay away from it. What might give me a better opportunity is to wait until we get closer to the New York trading session. That's usually when I see moves after a technical setup, very often as a result of economic data, and then there's less of a retracement against my position, whichever direction I'm trading it in. So for example, when I sold it this morning, there was a slight retracement, but there wasn't as much of a retracement. It's just waiting. Most of the momentum, most of the direction, most of the volume, most of the selling, most of the pressure was to the downside with that selling opportunity. That's what I'm getting at. And there are specific times of the day or specific sessions that we can trade where we can sort of count on that behavior. It doesn't always happen, but usually I get a better opportunity around the New York trading session. So I'm probably going to pass on this HL30 as tempted as I am to see that there's the chance that it could easily go up 20 pips. The HL30 is not a big trade. It's a 20 pip stop, 20 pip target. It's not a big trade. It's just an opportunity to take some money right away. Maybe you can find the opportunity to trade it on another currency pair at the same time. If you can trade multiple or have multiple positions open at the same time, you've got to be able to factor that in to your money management. The structure, the way you're executing your trades. You don't want to overexpose capital, of course, but I think I'm going to let this one go altogether. One other quick note here. I want to show you a couple of ranges. So I've been getting a lot of questions about the euro yen and the pound yen. So I do trade the euro yen and the pound yen. I like trading them. They're usually going to provide me with a bigger profits. So for example, if I was to trade, we're looking at the euro yen right now, 1 hour time frame. If I was to trade the continuation breakout trade on this pair, normally in a normal market environment, I'm not talking about what's been going on lately, I'm talking about a normal market environment. We see that stretch, right, that breakout, and then it continues to trend, and the market's really moving in a nice manner that you can track the volume. Everything's lining up right. Normally that trade, the continuation breakout trade on the 1 hour time frame, would pay up to 150 pips. I would scale out at the first 80 pips, but it could trade up to 150 pips to that final target. That's in a normal sort of condition, normal trading ranges. If you look at this dotted line right there, that's the start of the new week. This is the 1 hour time frame. So we've got this week so far, and we've got most of last week over here to the left. This has been inside of this range of consolidation for quite some time. This makes it choppy. The longer it stays inside of consolidation, the fewer trade signals I get if I'm going to be looking for continuation breakout trades. There might be an opportunity to trade a short-term opportunity here to the upside. We've got this tweezer bottom right down here, so I would make an adjustment to that support right here, but I've got to factor in the overall low right there for the week. That was earlier, a couple days ago, right? That's sitting right down here with a low on this MetaTrader platform at 129.12. So that's my low for the week. Possibly a short-term trade right here if a 1 hour candle closes above this resistance point right here. We've got 1, 2, 3, 4 sort of touches there at that resistance point. They're not perfect, but they're pretty close. It's a pretty, in my opinion, a 1 hour time frame. This is a pretty solidified short-term resistance area right here. So if we take a look at the 129.63 right there and the 129.12, that distance, that's still pretty tight. That's relatively tight for a continuation breakout trade. So if you followed along with the continuation breakout trade and the structure, the high and the low of that consolidation range, it needs to be a specific number or a specific distance. If it's too tight, let's say 50 to 55 pips from the low to the high, if a 1 hour candle closes outside of that range, very often the next few candles will come back inside of consolidation, and that continuation breakout trade would fail. So you have to know the optimum conditions for a continuation breakout trade. These really aren't optimum conditions. Maybe later, or maybe in the next day or so, I can make an adjustment if price comes up and spikes here, and then maybe a few hours later it will then close above that and then give me a better trade. Maybe I can trade it for 40, 50, 60, 80 pips, something like that. I don't think so, because this range is so tight. But anyway, the question is, do I trade it? Why haven't I traded it lately? And again, it just comes back to this consolidation range. It's stuck in this major overall range of consolidation. When it finally breaks out, I'm expecting that we're going to get that 150 pip move. The same thing here with the pound yen. So the pound yen, I talked about this at the beginning of the week and over the weekend with the update. That gap right there, as tempting as it was on Friday to want to short this. Let me go back over here. This is not the pound dollar, of course, but it was similar. There was a sell opportunity before the market closed on Friday, and I don't like holding onto these positions through the weekend. I'd rather not. In this situation, it would have hit one of the targets. The same thing with the pound dollar, but it's hard to say. You close on Friday and you're in a trade, and then it could have just as easily taken into consideration everything that's going on with Brexit. It could have gapped up, 80, 90 points up here to the high. That would have put a lot of pressure on a lot of people if I would have held onto a trade like that. So again, it's tempting. Structurally, this one worked, but you can see just how choppy it was before that happened. It was still stuck in this overall range of consolidation for about 2 weeks. There were some opportunities. I'm not saying that there's no opportunities to trade it at all. Obviously, some reversals and some technical trades inside here. But as far as looking for that breakout trade, this one here, the pound yen, the 1 hour time frame, when I trade the continuation breakout trade, if it's optimum, if everything is lining up right, the conditions, the price pattern and that structure gives me room to trade it to that 250 pip, that's what we earn. 250 pips is that last final target. If I'm scaling out on the pound yen, I scale out at 150 pips. Sometimes they short out, right? They run into a temporary range of resistance or support. So I can only take what's available at that time if it looks right. But I'm talking about the optimum continuation breakout trades. And that's the other thing with the continuation breakout trade. You don't always get them. You get them often, and you have to prepare for them. But you need to know, again, which ranges of consolidation, the high and the low, the support and resistance levels that you need to use are appropriate. Again, I talked about in just the previous chart, that range was just a little bit too tight for my comfort level. It's pretty close, considering that it's the euro yen. Considering here that this is the pound yen, it's going to move. It's going to cover a bigger distance than the majors like the euro dollar or the pound dollar. So we have to take that into consideration. This week, it is a bit choppy. I'm not saying that I would use this week's high or the low right now. Maybe a better opportunity would just be to trade off of support or resistance, significant support or resistance when it gets there. Right now, what I have, if I was to move these lines here, we've got this week's high and this week's low, and price is stuck in just about the middle of that range. So I'm going to leave it alone. When I see price stuck in the middle of a consolidation range like this, I can see some of the candle patterns, but they don't always indicate that that's where it's going to move. If we look at this last few bearish candles here, you would think maybe to the downside. I remember when I first started trading, that's what I thought, right? You get all these textbooks and you read about these candle patterns, and you start thinking, well, when you see a candle pattern like this, maybe it's going to go, where else is it going to go? Naturally, you would think down here to support would be the next level. And so you sell it. And then it doesn't go anywhere. It pulls right back up again, hits your stop because you're not using the right stop according to the price structure, the setup that's here. And then it comes back down later on and it hits your target and you're stopped out. So these moves are choppy. You got to be careful with it. First of all, you got to realize that the retracements, even if it does move to the downside, the possibility of the retracement, because it's stuck in the middle of this consolidation range, it's there. It's high. It's probably and likely to happen. That retracement is enough to stop me out if I'm going to use a 20, 25 pip stop inside of a range like this. There's no reason for me to be using a bigger overall stop loss, unless, of course, I'm going to take into consideration this week's high and this week's low. That changes the dynamics there, but nobody really wants to use a stop loss that's high. That is that high. We've got 100 pips from where it is right now, where price is settling here at 147.40 approximately to 148.40. Nobody's going to do that. And then it would still have to be a few pips above that high. So why waste your time with that? Again, it's easier and better, in my opinion, to just wait for price to hit significant support or resistance at this point, and everything could change. But at this point right now, what is significant for this week is this week's low and this week's high. Again, that could all change with more price structure, the movement, the flow, the sequence of events that are about to develop over the next couple of days and maybe even next week. So eventually I will get a continuation breakout trade. It will settle. I'll tighten this up. Price will settle into a more structured consolidation range. So if you remember yesterday, I was talking about one currency pair that I was looking at, the continuation breakout trade. I believe it was the euro dollar. We were talking about how I like that look and feel, the price action where it looks like I can box in a range of consolidation. This is sloppy. When I look at this one, I think this is, there's some opportunities here, but you've got to be on it. You've got to be willing to babysit and stay with some of these trades if they're going to move and look like this, meaning that you're going to sit there for many, many hours in some situations waiting for it to actually do something that gives you, an indication whether it's actually going to work, or it's time, to cut it off if it's going to fail. I don't like trading in that type of environment. It's exhausting, and you end up missing a lot of other opportunities later on, or you tie up capital in a trade like that. I'm not going to tie up capital on a trade that looks like this with this kind of price structure. Again, I'm going to be looking for something that, if I was to look at this particular currency pair, it would be a while for me to actually go back where I could find the structure that I'm talking about. This looks a little better back here if we were to go back to like September. And then this looks a lot better right here. We're looking at August. So we've got a low, a tweezer bottom low there, then a high, and then it breaks out, and that's the continuation breakout trade right there. This was probably traded back in August, and that's why it's got that signal there. But this is what I'm talking about. It might be a little bit hard. You don't need to see the candle patterns, but what I want you to see is the price structure. So you've got that tweezer bottom low right here, and that looks like it was probably about August 15th, and then it moves up, and there's a spike high. So I've got a low and a high in there. And again, you've got to measure the distance. You've got to make sure that it's far enough away, and then things go sideways for a while through the following week, and then we finally get the breakout trade right about here, maybe Tuesday or so of that week, with the indicators confirming, and it starts to move up to hit that 100 or 250 pip target. They don't always take this long. Some of them do, some of them don't. Usually, if it's backed with some news, that 250 pip target, it could hit in 2 or 3 hours, maybe 7 or 8 hours. If it's not, if it's like the conditions that we're trading in right now, it could take a while. It could take maybe 2 or 3 days. It's not uncommon. We're talking about 250 pips. But then again, it is the pound yen, and it can cover that kind of a distance quickly. So that's a lot of money when you're trading standard lots and you're picking up 150, 200 points on a trade like that. So again, you don't get them all the time, but it's definitely worth watching and waiting and following along, making the adjustments that you need to support and resistance as price continues to give you this structure. Sometimes I'll have support and resistance set up, and then I'll get a spike. But it doesn't confirm, and then I've got to make the adjustment, whether it's to the high or the low. This is just really choppy. I don't anticipate trading this one for quite some time. I don't even think it's going to happen for the rest of this week. But I could be wrong. There could be some kind of a surprise, some kind of shock, and then we can get like a great opportunity where it actually goes to one of these levels, support or resistance, and then it's pretty obvious with the news, volume, and everything else that's lining up at the same time. So again, many of my opportunities in a situation like this are going to happen with this type of a market environment. It's going to happen usually around the New York trading session, mainly because of the volume and the participation that's available at that time. It's usually pretty consistent, and it's going to move in one direction after a solid setup, especially if it's backed with some news that I can confirm, and I can see both technically and fundamentally that price is probably going to move in that direction for maybe an hour, 2 or 3. Those give me the better opportunities. I'm not saying that every New York session it gives me that opportunity. It's just when it sets up like that, it's usually more often than not that that's going to be a better risk to reward trade. That's pretty much it. I'm not going to talk about Bitcoin in this one. I get a lot of questions about Bitcoin. I do trade Bitcoin, and I have a separate program for Bitcoin, but be careful with Bitcoin. Do the same thing with Bitcoin. I'll just leave it at this. With Bitcoin, I'm going to trade either the T2 pattern, the Tech 1 trade, or the continuation breakout trade. These are all techniques that I developed, and be careful with Bitcoin. I don't think it's going to run up to 12,000 tomorrow, but we keep seeing these breakouts to the upside, and everybody's screaming and yelling. It's this. Hopefully this is it. Hopefully this is it. You'll know when it's it. You're going to get an opportunity. When you get that breakout and that trend, you're going to get pullbacks. You're going to get multiple opportunities. With the same thing with the continuation breakout trade. Sometimes, for example, with the continuation breakout trade, you might miss the actual entry. It happens with me every once in a while for whatever reason, and then I have to wait for the pullback, and I get that second entry opportunity where it pulls back to, let's say it closes below this support level, and then it moves down a little bit, but it doesn't hit its final target. At that point, then I know that there's still an opportunity that I can still get into the trade. I wait for the pullback. Sometimes it'll go right back to the level that it broke out of, that support level, and then it'll test that level. And as far as whether it has to hit the number exactly, that's not always the case. Sometimes it'll fall just short of it. Sometimes it'll go through it. Sometimes it'll stop right at it and then turn around and then print that Tech 1 candle pattern, which would be another bearish signal, and then I can get in at that opportunity. Same thing with Bitcoin. Sometimes I'll just wait for Bitcoin to break out and then look for the pullback and then wait for the opportunity. Otherwise, anything else, I mean, as choppy as Bitcoin and any other cryptocurrency can be, and the way the market reacts to it, traders, sometimes it's better to wait for those pullbacks. It takes a lot of confidence. It takes a lot of patience. And you also have to be willing to accept that in a situation like that, sometimes with these breakouts, that's it. It breaks out and then it just keeps going and there is no pullback. But the pullback, waiting for the pullback, and this is something that I learned from John Bollinger, waiting for the pullback, that second entry opportunity is usually the best and least amount of risk versus reward on a trade like that. It just takes a lot of patience. I mean, you've got to be, not only that, trading cautiously like that, you do miss out on the trades where they actually break out and then they drop and there's no retracement. And you have to be okay with that. You have to be comfortable with that. You have to say to yourself, well, that's just the way I prefer to trade. I'd rather trade looking for these better opportunities where I'm constantly minimizing the risk. If you know the conditions and you know that it's a possibility that there could be a higher chance of experiencing a failed trade, then just stay away from it. Yes, it's possible that the trade could work out, but there's also the possibility that you increase that risk of it failing, and you're trading in that type of condition, that type of environment. Do you want to do that? Some people are okay with it. That's okay. If you trade for a long, long time, you start looking at it and you start changing your opinion and you start thinking to yourself, well, maybe it's just easier to just have fewer trades, but having most of them just be winning trades. You take a lot of stress out of the trades and the overall experience. I mean, when you're doing it day in and day out, there are times when you should be more aggressive. I'm not talking about being like you're just sitting around, letting age get to you and not wanting to trade aggressively. That's not what I'm talking about at all. What I'm saying is having the ability to identify the conditions, the environment, and then saying to yourself, this is where I need to be more careful. So maybe I should cut back. You're going to get a better opportunity where things are moving in a more consistent manner and things are lining up better. The breakouts are better. The news is obvious. The sentiment, everything's lining up together at the same time. You can see it. You feel it. There's a flow. There's a rhythm. You could move the charts. You get to the point where you can start like moving your charts and then moving one candle at a time right back up to the live candle, and you can almost predict where it's going to go. It's like that flow, that rhythm. That's when you can trade a lot more aggressively, and you're going to be trading. You're not trading in that type of environment where there's a higher probability of failed trades left and right because it's choppy. You're trading with more consistency. Anyway, I'm sorry for that rant, but this gives me an opportunity to answer a lot of the questions that I've been getting over the last couple of weeks because it has been choppy for a lot of people. A lot of people are still trying to execute trades. I'm being cautious here, but they want more, and you got to be careful wanting more in this type of environment. I'm not saying that there isn't more opportunities. There certainly are here, but you got to be careful with it. You got to be really selective, and then pick your times. Pick your times the way I was talking about how, for me, the trades that I execute, the better times are during the New York session.